Okay, so let's welcome everyone to India Market Review from Bangalore Investors Club. This is the 17th of October 2014. There's been obviously a correction going on in the markets last few weeks. Here's the Nifty on your screen, and if you just look at that, then uh, we had that expanding triangle which was there twice, and the second time, of course, again it went higher, but finally we now have a double top in place at around 8,200 and a clear downward move, and clearly we have now lower tops and lower bottoms. So uh, the next up move can only be validated if 8,200 is taken out, which at this point looks quite unlikely. There is a gap in the charts here, early August, which has still not been closed, and the market going down to 7.6. That's another 180, 200 points will definitely close that gap. Most likely that's going to happen. And there's another gap to point out here, early May, right on the left side of the screen at 7,000 levels. So that's another gap that has not yet been closed. So there's two gaps to make note of on the Nifty. And just to highlight, of course, I know things look nice in retrospect. I hope everybody can clearly see the negative divergences that had been building up on the markets for quite some time. So you have the RSI here, and if I can just zoom in a bit to make it clearer, I'll make this smaller, and let me make everything else okay. Right, so you can clearly see that here you had double tops on the market, and you had a pretty steep negative divergence here, okay, and the correction after that. So if you had looked at this, especially after the double top had formed, I mean, it should have been pretty obvious that this negative divergence was there, and then the follow through. So just bringing back the volume again here, as it went down, the volume has picked up. Of course, the volume now has significantly dropped, but the early part of the fall was associated with higher volumes. But I think the really important point to note is that there was a clear negative divergence, a pretty good one. I don't think anyone can deny that it's there. Also on the MACD, in terms of very long term, let me go to weekly. Yeah, so you'll see it clearer here. You can see that on the weekly chart, just ignore this line for a moment. Here you have that MACD not going up higher on a weekly basis, while the market was clearly inching up at that time. So that's, let me just minimize this. This is the time frame we're talking about, where during the time of the expanding triangle, the market went up, but the MACD on a weekly basis could not go higher. Also, for those of us who have been in the technical indicators, you can see that this is the weekly MACD. Remember, I mean, you're coming to really big extremes on the MACD. So like Sid correctly mentioned, I mean, the market had already run up quite a bit, and at some point the correction was due. And I think the evidence of that correction going to happen was clearly given by both the MACD and the RSI, and in retrospect is actually definitely not a surprise that the market topped out. All right, so that's why actually it's nice to have taken such a long break. You see the markets in such a different light. But the point I want to make is I don't, I know it sounds, again, I keep saying this, sounds nice in retrospect, but I think for those of us who were following technical analysis properly and following the divergence issues, The evidence was overwhelmingly there. And like I said before, I had gone for Hajj. These expanding triangles were definitely not good signs of a sustainable up move. What we did not know was only till where it would go and turn down. But if I just come back to the chart, I think once it made this 8,200 and it was unable to go back there in the third week of September, you had a big warning there itself. And if I zoom in, this part, which is really a bearish engulfing, right? That I think is just another uh, additional proof of weakness in the markets. And after that, you've just had the moving averages get broken. You've got the 50-day moving average breakdown, and right now we are sitting at the 100-day exponential moving average, which I think is inevitably going to break down. I'm not sure whether this much of a correction is enough. Of course, you have this breaking news about consumer confidence in the US, but overall there seems to be a lot of concern about global economic growth and Ebola right now. Okay, so let's put up those here. Okay, all right, so concerns about Ebola right now, is probably not a big issue in terms of its economic impact, but it could be, and we'll just have to wait and see how that goes. Please remember that while we are talking about, I'm sure all of us have seen the news about there might be 10,000 new cases and all. What seems to not be mentioned in the news, which was there about a month back, is this, if I remember right, the Italian medical institute, which was on the verge of having an Ebola vaccine, and that some of those initial batches of that vaccine had already been sent to West Africa. I'm not sure how that has panned out. I've not seen further news. It requires, reading up. But if that vaccine is ready and apparently not too difficult a disease to vaccinate, then it's just going to go into mass production. And WHO actually waived the requirements for a proper human clinical trial, if you remember. And therefore, anyhow, so this, what I'm saying is there is these things that are there, and when the push comes to shove, things will be done. So at this point, I think Ebola is still a question mark. There's talk today about Obama creating an Ebola czar in the US to take over all necessary measures for fighting Ebola or against Ebola in the US, and we'll see. But at this point, I think it's just a wait and watch thing. Yes, thanks, Balki. So locally, we have the Maharashtra and Haryana elections. Results are on Sunday. I'm not sure the results are going to impact the market in any which way. We're expecting the BJP to win. But at the end of the day, okay, fine, they get the seats and all of that. We really need to see a push on economic reforms. And that's still something that's, I think, we need to see evidence of. They have reshuffled the economic team in the ministries and all of that, some new secretary and all. But it's still early days, so we'll have to wait a couple of more months, I think, before we can really see any real results. So we are all living on hope right now. If there is anything really useful is the crude oil correction, right? So I think we are now at around $80 a barrel for the Indian crude oil, which is a great relief. There is this talk about diesel being profitable for the oil companies by 3 to 4 rupees a liter, which has never happened in the last, God knows, 20, 30 years. And there's talk about once the code of conduct, I don't know why it's still there or something, goes off, the diesel prices will be brought down by 3, 4 rupees. So that's one big major plus for India. Plus we have inflation has cooled down. So these are definitely great positives on the fiscal side. and could actually help the market in the weeks ahead and the months ahead. Question is whether crude oil stays down and inflation stays down, and as of now seems to be pretty okay. Ranjan is mentioning about reforms and budget making. Yeah, but I think we really need to see action on the ground, and that's only when the markets are really going to be convinced. So call it whatever rally you want. It's just a question of see, if they talk about Europe going into recession, they talk about QE4 that might happen, and the U.S. economy stalling a bit. And on the other hand, you've got this consumer confidence at a 7-year high. So right now, mixed signals, but the concern for global economic growth is definitely there. Uh, all said and done, yeah, okay. Well, just to add to that, TCS and HCL down 9% today because they missed their forecast, especially on dollar terms. So things not looking as rosy as were there, and concerns about growth on a global basis. So we might grow, but we're going to have strong headwinds ahead. And I don't think this is going to disappear for quite a few months or quarters and all. And therefore, probably going forward, there will probably be more and more. You need to use the word carefully. Corrections or maybe knee-jerk reactions. I would say at least for the next 6 months, because I don't. At least my limited analysis does not convince me that we're going to have a smooth ride ahead. Either even if you have a great ride locally, then what I mean by that is Modi wins more states, and he's got maybe the Rajya Sabha in his pocket. That will actually take 2 years, by the way. There's good political analysis on that, and then reforms actually start. Even then, the global issues are, I think, just too big for us to ignore. There is this ongoing fight about France's budget. I don't know how many of you have seen that. It's not meeting Euro guidelines, European Commission guidelines. They have a deficit which is higher than what is acceptable, and 29th to 30th October there's going to be some sort of a decision on that, and we need to see how that plays out. So Germany is saying they need to change the budget. France says we can't do it, our recovery is not good enough. So basically, like I said, the global issues can't be whisked away. So any up move, I think, remains, in my opinion, stock or sector specific, and I would say that more than before or more than 6 weeks back, I think it's going to become a more and more stock specific result. So today we had banks rally, but we have IT doing really badly. We have yeah, Bobby is adding about RBI and Fed rates. There are no changes. So RBI has not cooled off the rates, and even if they do, not much. Then you have this. Okay, so let me add this DLF concern that not so much about DLF itself, but DLF basically has built up about 60% of Gurgaon. And the good point that somebody made is that now that DLF will find it very difficult to raise money, and they have 19,000 crores of debt, they might be now forced to reduce their flat prices in order to generate a cash flow. And if that happens, you could get a cool off in the real estate market itself, which I mean, I think would be good for a lot of people who are looking at buying, wanting to buy accommodation. Here's a very good tidbit of information about real estate in India. Okay, it's not really relevant to today's IMR, but just putting it out. Okay, apparently in most of Europe and US, the cost of buying a house is between 3 to 5 times your average annual salary. So buying an average house will mean that a person's 3 to 5 times average annual salary. That's the sort of, in a sense, affordability you have. Guess what it is in Bombay? In Bombay, apparently it is 35 plus, and that's just ridiculous. It's just ridiculous that in a city like Bombay, you have something where uh, the vast majority of the people just cannot afford to even dream, forget about dreaming, afford to dream of buying a flat. And that just gives you a sense of how ridiculously expensive real estate is in India, vis-a-vis affordability and vis-a-vis global benchmarks. And if you have a real estate correction, well, I personally hope there is, then that's going to cool the market down, and a lot of contraction in infrastructure could happen because of that. So that is something that locally is something that we need to think about. If that happens, RBI might be forced to reduce interest rates, but these are all scenarios I'm talking about, 3, 6 months, 1 year. Wait and watch, right? Uh, yeah, it's true. I mean, Mumbai compares to Manhattan and Dubai in terms of cost and all. The thing is that all this is just not sustainable. That's the only point. So for months and years, you could have these elevated prices, but at some point, it's just going to have to give. The question is, when will it give? So, well, that's the macro picture. Anyhow, so back to our market review, right? So I think these are the broad issues at this point. So like I said, just to recap quickly, a negative divergence clearly seen September, October. The market correction should not have been a surprise in my opinion. Clear double top on the Nifty that was formed there in early September and mid-September. Then we have concerns about global economic growth. Ebola is still a, I think, query. State election results, good, but I doubt they'll have an impact on the markets. The biggest plus for India is the crude oil correction and that inflation has cooled down. Hopefully, the crude oil at least should stay down for some time. But remember that winter is not too far and crude oil could start climbing up again in another 2-3 weeks as consumption and demand picks up in the West. Bad results by the IT bellwether stocks, and that's taken a toll. And then the question about not DLF directly, but whether because of DLF's financial position, whether you could have cool off in the real estate market in the NCR region, and that will cascade on to the rest of India, right? Okay, so that's it. And then, so if you're looking at the Nifty in terms of levels, you're looking at 7,700 at 7,779. Oh yeah, I forgot to mention. So we've had the big revision in lot sizes, right? So actually that's I think a big breather for a lot of people. It comes as a good news for traders. So a lot more affordable to get into FNO, half the margin requirements, which is great. Of course, more people will lose money. That's the unfortunate side. So those of us who are careful and smart, well, it's definitely good news. I'm all for it. Even if you're going to trade with the same capital, remember that now you have the option of, with the same capital, doubling your lot size, and having multiple lot sizes instead of just having one lot size gives us more options in the strategies that we can use when it comes to futures and options. Okay, so that's the general stuff. Coming to the levels, so 7,700 on the Nifty I think is more or less going to happen. We are on the 17th, and when is expiry? Let's see. So 30th. So we've got another 2 weeks, and I think, oh yeah. So brilliant time, I think, to start looking at option writing strategies. Remember that we have 2 holidays next week. That's 23rd and 24th, Thursday and Friday. And then on 30th we have our expiry. So next week onwards, at least on 22nd, that's like 1, 2, 3, 4 days straight. Pretty good opportunities could be had on the option writing side. Not often that you're going to get long weekends as this. So should look at that. So let's review that, especially in the mentorship group for the next 2 weeks. So on the top side, I think 8,000 psychological mark is something to look at. I don't want to look at the option chain today, but if anybody else is, then please do, and then maybe send us the inputs later. I think 8,000 psychological mark, 8,200 for sure. Looking at those calls and looking at the IVs of those calls and seeing whether those calls are safe to write is something you could definitely look at. I would definitely not write any puts. If there's anything, maybe 7.5 is quite distinctly possible. That's where the next strong resistance is, in my opinion. Okay, and right now we are in sort of no man's land with except the 100-day moving average right there. So might do a little, dancing around at these levels, but upside is limited, more prone for it to go down rather than to go up, at least the Nifty. If 7.5 breaks, then I think 7.3, 7.2 will become very, very distinct possibilities. And keep in mind that this gap, for it to close, market will have to go to 7,000. So we're still talking about another 10% correction from current prices for the Nifty to actually close this obvious window there, right? So the next strong level, I would say 7,000, not even 7.2, because of this window, because of this big up move, and we'll keep reviewing it obviously. So let's see what happens. So just to keep it straight and simple, 8,000 I think good resistance, 8,200 fantastic resistance. Those of you looking at writing some calls can consider those. On the downside, I would say 7.3, 7.2 before expiry is definitely possible, maybe even 7,000. 10% more correction from where already a correction of about, I think, 400 points may seem a lot, but it's one thing in the markets, they can tend to surprise. So I think you have to be really careful. So the bottom line, I think, is protect any longs you have, right? So any long positions that you have should be protected with a stop loss and or a put option, right? So make sure you hold on to your profits, don't let them disappear and become losses. Individual stocks could be very different, but I think basically protect longs, no fresh buying at this point. There's no evidence, at least on the Nifty, that any support has been taken, and I would say maybe possible shorts should be looked for. Let me put it here. Okay, right. So let's get into the sector indices now. Okay. So here's the Bank Nifty. Okay. So more or less gone sideways right from May. So 1, 2, 3, 4, 5, 6 months. Not much action. I'm not sure if there's any particular news today because of which the Bank Nifty went up. But well, inflation news came out, I think 1 or 2 days back. So anyhow, it was already on a 2-week uptrend, and that uptrend just continues. 16,500, 16,250. That's the level we need to watch out for, and 15,000 on the downside. UCO Bank, Axis Bank results came out today, and the asset quality was good. I don't know which other. I'm going to have to take some time to catch up on all the news that's happening. Looks like we're in the middle of results season. If anybody has any news about any major banks apart from Axis Bank today, which declared the results, then just punch that in. Be helpful. But looks like right now 16,250 is the top side limit, and on the bottom side 15,000 is really good support. Till one of those breaks, I would just say best to just wait and watch on these levels. Okay, so it's been range bound, and a breakout breakdown could make it move by 1,000 points easily. Right now, good support on the lower side, that's for sure. Question is whether a breakout could happen. Autos, all right, so autos have gone up, and topped out. Clearly a sort of rounding formation seems to be happening. If it comes to 16,500, or actually even if you put that here, uh, this could be a neckline, folks. All right, and so yeah, if this were to break, we're talking about 16,900 to 18,000, so about 400 point fall that could happen on uh, the auto. Auto results mixed. I haven't seen anything, so I don't know. Just take your word for it. In which case, of course, it will be stock specific. Some will do well, some will do badly. But the 400 point definitely looking fall looking possible. That's about 3% on the auto side. Uh, Diwali coming up, I think whatever bookings had to be done would have been done. Uh, Apart from that, Maruti Ciaz, no new launches as far as I'm aware, and things could just cool off after that. Okay, so again, limited upside on auto and 3% down move possible on the auto index. Consumer durables, sort of a triple top there, right around 10,000. Small recovery today, but most probably, going down. Okay, capital goods. All right. So yeah, clearly, weakness in the capital goods space. So lower tops, lower bottoms, much more clearly seen on the weekly chart. Right? Though right now for the last 2 weeks, not 2 days, 2 weeks, 3 weeks, seem to be going sideways at around 14,450, when we've got these spinning tops, dojis, weekly ones and all. So a little bit iffy, but I think the trend is more down than anything else. On the top side, 15,000, 15,500, big resistance. On the bottom, 13,500. So the bias would be definitely be down. FMCG, well, clearly no doubts there. So the FMCG story for now seems to have been halted. Uh, Lots of upper shadows, clearly selling at higher levels on FMCG is being seen. So trend line, big one actually. It's been there for many years, right? So this trend line from 2011, that's where it is. Of course, it's been tested before and breached here and then gone back up. And we have a sort of double top, 2013, 2014 at those levels. So I think we could see some pretty limited upside on this, and those higher my apologies, sorry, so those upper shadows, really not good news. And wow, MACD, big move away from the signal line. No way that this is actually going to go up at this point. Might have brief rallies, but at this point I think any of those rallies should be shorted. And once this trend line breaks, then all the way perhaps down to 6,900. Healthcare, so it's been a fantastic rally. We have the Sunrun Baxi merger being talked about. I don't know how many of you have seen that news, but good write-up on, oh, by the way, here's another divergence, pretty big one on pharma, right? Is there in stochastic, is there in MACD? MACD did a negative crossover. Okay, so I think if you went back and looked at more and more of the sector indices, you'll find these negative divergences in many places. So just to reiterate, I don't think the correction should be taken as a surprise. The evidence was pretty much there on the charts. Coming back to the Sunrun Baxi thing, Interesting tidbit of information. Together, these two companies merged will have sales of $4.5 billion per year, out of which only $1 billion comes from India. So for all practical purposes, Sun Ranbaxy thing is an export company now, and the dollar thing is going to be, the dollar rate is going to be a big issue. So it's good when you see, hardcore data like this supporting your view that pharma stocks are now basically like IT stocks, sensitive to forex prices a lot, much more than anything that happens in India. What happens abroad is going to affect these companies. So if you're looking at pharma, you really need to look at how these companies are operating abroad, the FDA rules and how they are reacting to that, global generic competition, and of course the dollar rupee rate. Right? Okay, so pharma down, breaking supports, and will, once this 50-day moving average goes, I think 12,500 can be a reasonable expectation on healthcare indices. It's a shame that these indices are not traded. It's so nice to trade them. Okay, metal index, well, what more do you want to say? Clearly heading down. Everything on the charts, except RSI here and stochastic here, some bit of strength, MACD still negative. So maybe short-term support would happen at this point, but clearly you're getting lower tops, lower bottoms, and it's more a question of whether this level is broken down. So it's wait and watch. On the top side, 11,500 would be very significant resistance for metals. Also this news about Tata Steel wanting to get rid of its European assets because they've been loss making. Just tells you the stress that some of these companies are undergoing. So in terms of levels, so if that breaks, then I think 10,000 on BSE metal is quite possible. 11,500 on the top side is the immediate resistance, and then 12,000 will be the next resistance on metal. So metals looks like they have to be shorted. I'll skip mid cap. Oil and gas, this is not proper. BSE power, okay, so it was range bound, broke down, just going sideways again, and will most probably, for all we know, break down again given the overall market sentiment, but seems to be forming a base right now. So I think power is just wait and watch. Good resistance on the top side. More likely it'll break down with the rest of the market than anything else. PSUs, just forget this. Realty, alright, so the big crash in DLF 2 days back, and Realty just tanked. But again, this was a line that was put before we did the last IMR. Downtrend, 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 and this is the thing, when you see support like this, it's tempting to say that things are looking good and you may want to buy, but then something like this happens and it just cracks after that. So this is the picture that you see on some of the other indices, metal and power and all. So don't be in a hurry to buy at this point. For all you know, one fine day, one sector will crack, then 2 days later another sector will crack, and then you'll get the sector rotation downwards. And this shorting or selling keeps coming in different sectors at different times, and then the overall index, of course, just drifts down. So Realty, of course, the big daddy is DLF and has cracked, and like I said, if the overall real estate market were to cool off, then the realty companies are going to be in bigger trouble, and we'll just have to wait. This is like multiple months, quarters that we're talking about. So start saving up to buy maybe another, flat or house or something. It's could be a few months away when you get a really good opportunity. Okay, that's it. So yeah, here's energy. So energy cooling off, going sideways for now, but with the overall market, it'll probably just correct. Remember that if there was some talk about it would be a good time for the government to just deregulate diesel completely, but I think the government likes to have control, if you deregulate it, getting regulation back on anything in the current scenario is going to be very difficult and will be perceived as anti-market. So it's very unlikely that the government is going to completely deregulate it, so they will still tell the companies about raising and falling. But the point is that if it does get deregulated, then the profitability of these oil marketing companies would be more assured, which it isn't right now. And for political reasons, yeah, you bring it down by 3 rupees, and of course then that has a knock-on effect on maybe calming down transportation rates and then inflation, etc. So uh, if the diesel prices are reduced, uh, the profitability of these companies definitely takes a hit, and you might just see a downward push on the energy stocks, the oil and gas stocks. Having said that, I've said this before, just reiterating it, I think from a multi-quarter, multi-year perspective, the oil and gas stocks are definitely good long-term investments and should be bought if you're looking at a long-term portfolio on any major correction that you get. Okay, then we have to the CNX IT index. Okay, so new life highs being made, and today's bad news has just knocked the wind out of the index. Again, you had divergence there, you had the divergence there, MACD going flat with a maybe at least not showing more strength. And then we got these results. Let's see if a further gap down happens and we come back to this 10,500 levels, at which point, I don't know, maybe a good buying opportunity. Don't know, right? So yeah. So everything in correction mode. Some things, none of them are in any state to buy. Perhaps some of them are shorts, and any bounce I think should be looked upon as a shorting opportunity right now. Okay, so that's it about all the sector indices. Now let's go on to all the nifty stocks, and then we'll see. Okay, so oops, I don't have that list. Last time we had that sector-wise list. Where we went through all the sectors at a time. That was really neat. Okay, anyhow, can't be helped. So we have, if somebody can bring up the sector list and just read it out to me as I'm going, that'd be great. So we'll do cement first. So we've got 3 in the Nifty. So we've got ACC, and clearly topped out at 1550 and then came down. So in terms of indicators, well, definitely seems to have found some good support at the 200-day moving average, but then significant resistance at 1420. And I would say wait and watch. I would say writing the 1500 call might be a good idea if it tends to go up. But if it breaks below this 1350, then we are definitely headed towards much lower levels, maybe 1300, 1250, etc. Right. Ambuja. Alright, so after making that life high at 240, it's come down, corrected, and just gone sideways. Really no comment on it. Nothing can be said. It's just going sideways. Nothing on the volume side, nothing on the indicator side. Definitely just a question of wait and watch. Your Bollinger Bands are getting squeezed. So consolidation going on. And for all you know, it just will perhaps break down at 200 with the overall market. But till then, it's a wait and watch. It has to break out above 220 or a breakdown below 200 before you can really take any action on Ambuja. Next is Ultratech. Okay, so was this result or something yesterday? Somebody can tell me something. The one thing about Ultratech, Aditya Birla Group and Aditya Birla wants to bid for the global assets of Holcim Lafarge, which is the world's largest producer of cement. And it's probably going to be an aggressive bid because there's a lot of global competition, and maybe I don't know if that's the reason why Ultratech has cooled off aggressive bidding or something. The bids are not yet in as far as I know, uh, or if it was some news or whatever. But anyhow, 200-day moving average broken. Today is just a doji, really no recovery, and well, sell-off definitely happened on good high volumes. And again, just want to re-emphasize that you see stocks going sideways in a negative market like this. That's all it takes. One day, a candle like this or a candle like this, and you go down from 2,500 to 2,300. That's almost 7-8% just gone in a day. So please, please, please do not consider buying anything at any support level right now. Let the evidence build before you get in long. If anything, you should be looking at charts. Okay, so this has broken the 200-day moving average on high volumes. 2,300 is a support, and if 2,300 goes, then 2,000 would definitely happen. Of all the three stocks in the cement side, this could probably be a good shorting opportunity with a stop loss above 24.20, especially, or rather, let me put it this way: you should short it if it goes below 22.75, and then put a stop loss above 23.80, and it could go all the way to 2050. Yeah, 2050 or even lower. That'll be a pretty good return on the short. Okay, so that's with the cement stocks. Now moving on alphabetically, Asian Paints. Ah, so making life high, definitely showing strength, not the sort of weakness that we've seen in some of the other stocks. Would not short Asian Paints. If I remember correctly, we've been talking about Asian Paints for like 2 years and saying don't short this, don't short this. Very, very good uptrend multi-year, and on a weekly chart, it's just going on and on and on. Especially for the mentorship group, I think you should look up the research reports on Asian Paints and see what they have to say, and might be good buying opportunities at lower levels. No shorting this stock, that's for sure. Just stay away from it. Maybe 600 rupees or 605, 610 should be put as an alert, and if it comes, then we review that for maybe a potential buy, maybe at 570, 560. Grasim, yeah, sorry I missed that in terms of sort of cement. So Grasim and Ultratech part of the same group. So I'm wondering now whether that thing about the global bid is an issue here. Again, no big recovery here, so market's not liking that perhaps. Broken the most extreme downtrend, a ridiculous line, but still, remember putting it a few months back from 2007, and you have a sort of double, triple top there. Again, it's not taken out the high of 2007. It's come down, and the breakdown from these levels of 30 to 50, quite possible that it go to 3000. So Grasim and Ultratech definitely tied together. No need to trade both. If you're shorting, short whichever has the lower risk in these two, and look at the appropriate levels, right? Okay. Stop loss if you're going short on this, I would say would be at 33.25, and I would expect a target of around 3050 in the next 1 to 2 weeks, probably before expiry. Oh God, I still haven't corrected this. Okay, let me come back to this later. Axis Bank, looks like I have a data error here. All right. Bajaj Auto. So it's definitely taken out its old life high. Let's put another green line. But clearly you can see selling at higher levels with all those big green candles, sorry, big upper shadows. Okay, so lots and lots of drama happening at 2350 right now. Probably consolidate here for some time. Unlikely to actually break down too quickly in my opinion. So could be a potential buy at lower opportunity, at lower prices, and 2500 could be a good call to write, though I wonder whether liquidity is there. Actually, liquidity should have improved with the lot size coming down, but do check on that and let's see if that's true. Okay, then Bank of Baroda. So the bank nifty went up today, but nothing really happening on Bank of Baroda. Same sideways move for the last 4 or 5 months. Uh, I think one should be looking at writing strangles on this with the appropriate strike prices. So have a look and write a strangle. Maybe the 950 and the 850 is something that you can look at writing at. And no sign of it wanting to move out either which way at this point. Bharti Airtel, okay, so was attempting to move up, but the volumes definitely not very good. Okay, and I don't know, just don't like the look of the chart. Just say stay away. As a lesson, here's something. If you notice this part, right, first 2 weeks of September, you've got these candles which are clearly becoming spinning tops and dojis and all of that. Just tells you a lot of uncertainty that is there. Inevitably, unless there's strong positive news or events or something, uncertainty usually leads to a cool off in the markets. And now it's broken below 400. 400 becomes the resistance. 405, 410 is a resistance that it's going to find difficult to break out of. And on the telecom side, do remember Reliance Jio, okay, will be launched this year or early next year, and that's going to put a big pressure on all of these existing telecom companies. So that's an event to watch out for. BHEL, all right. So public sector plus capital goods, excellent support at 200, and I think is a multi-year support. One sec. Yep. All right. So multi-year support, stocks being bought at around 200 and it's going up. So even though the market overall in the last 1 or 2 weeks has come down, this has actually found some excellent support at 200 and it's done that on good volumes too. All right. So BHEL definitely a buying opportunity, I would say. At this point, it has to break out above 240 for it to be a convincing buy. But I think BHEL should be put on your buy watch list. Any liquidations that you do and cash that you have, at least for the next, I think, month or two, this is a short-term buy that you could have. Notice from 200 to 220, 226, you're already sitting on a sort of 10% return in about 2 weeks. So putting alerts, knowing which the long-term and strong resistance supports are, and then looking for the appropriate evidence. At what time would you have bought this? When you saw this higher volumes, maybe on this day, the next day, so on 8th of October or the 9th of October. So from there about 4-5% profit, and most probably likely to maybe we consolidate here for some time. Very unlikely to move down. More likely to maybe consolidate here for some time, and then when the market sort of stabilizes or recovers, break through that, and 250 would be the next target, I would say. BPCL, okay. So new Li-Fi not really being taken out yet, but clearly showing signs of strength compared to the overall market. Just to reiterate, I've been talking about buying BPCL for several months now and not selling any of it. And for those of you who have the conviction and the financial strength, I'd stick my neck out and even say, just buy futures and roll. Need to support it with the mark-to-market, pressures that you may face. But at this point, I think 600 is not going to break down. Right? It's at 666, devil's number actually. And 650 probably may break down, especially if a big discount on diesel happens. But any dip is definitely a buy. So if you're looking for the, building a portfolio, BPCL I think should definitely be a part of your core portfolio. And those of us who are willing to, then roll to the future on this. Okay. Sorry, I didn't give you levels. On BPCL, I would say short-term traders, you really have a good support at 647 or even 630, the lower Bollinger Band, unlikely to break that. On the top side, it needs to really break 700 or 711, and then it'll go up. You could look at a horizontal spread, uh, whichever, I think 650 or I don't know 680 or 700, not sure what the liquidity is like. Sell this month future, sorry, sell this month call and buy the next month same strike price call, and look at the horizontal bullish strategy on that. Okay, uh, yeah, should be possible to do. Right. Okay, and then Gain Energy next. Oh, what happened? It's falling, falling, falling. Well, I'll tell you what happened. Crude oil prices went down. Cane is almost a proxy for global crude oil. So crude oil has gone down because they basically, get paid. They pay by, they get paid by the international benchmark. So down you go, basically. So no sign of crude oil recovering, I think. And if 275 breaks, then 250 probably. There's a window here, small one. I would say excellent resistance at 285, and just wait for 272, 270 to break, and it should most definitely go lower, all the way to 260, 250 possibly. Right, there is the volume. Yeah, now going down with higher volumes. Absolutely no sign of any recovery right now. Even if the stock bounces, good resistance at about 290, 295. Can look at shorting it again at that time. Bobby is asking whether crude oil prices affect oil exploration and drilling companies. Yes, they do, most definitely. So just to give you a benchmark, shale oil, which is much, much more expensive to process because it's very sticky and sticks to the sand and the mud and all of that, is something that was a big, big push because crude oil prices were $100 plus. The global cutoff benchmark at which the price at which it becomes economically viable to process shale oil is $80 a barrel, and we're very, very close to that. Very possible that we could fall below that. If the price goes below that, then there's a lot less incentive for anybody to go and look for more shale reserves. As a matter of fact, Reliance is probably selling half of its shale investments in Canada or US for some amount. It was there in the news. Whether that's because of the price fall, I don't know, but that's the thing. So yes, lower prices, drilling the crude oil, say from a seabed or from something like Rajasthan, it's much, much cheaper. You can do it at under $10, $15 a barrel your cost. I think at some places even $5 a barrel. But shale oil, yes. So it depends on what type of oil you're talking about. But as the prices go lower, there are certain areas of the world where it just becomes unviable to explore. So, and that's a cycle. This is a cycle that just goes on and on. It's a known multi-year cycle. And if we are into a multi-year downturn on crude oil, then great. I mean, in terms of how the impact would be of the Indian economy, and of course, the Middle East countries will complain. But for the rest of the world, it's really going to help as far as economic recovery goes. So that's a cyclical downtrend that one may want to explore and see if the duration that it takes to stay low. Cipla, all right. So pharma stock that should clearly not be sold, right? Okay. So yeah, sorry. So even though the pharma index is showing weakness, supply is definitely not. And I think any correction on Cipla, what a move it made after breaking out from its multiple sort of life high at 450. Once it broke out of that, it's just gone to 650, almost 50% in what, 2-3 months. Breakouts like that, I mean, crime to miss them. Thing is, when I say miss them, the only way to catch them is you need to either be doing charting every day, literally, or to have some sort of system which catches it or puts alerts and is analyzing it. There's really no other way. But missing something like this is just shameful. Anyhow, so at this point, I would say just stay away from it for a little while. Watch for more evidence. Volumes are petering out, so no hurry to buy this. Could come down to 550. Good support with the 50-day moving average, and maybe settles there. You buy it, or you buy it beyond 630. Or for those of you who are looking at long-term portfolios, just start a SIP on this, and buy 5 or 10 stocks every month, and just keep buying it. Yeah, I would say 750, 1000 on this stock is maybe next year sometime is quite possible. Coal India. All right, so forming a base here. Well, here's most definitely something. Let's see. 1 second. Just give me a minute. Yeah, I would say on MACD you're having a, what do you say? Uh, Sort of positive divergence. It's really not too strong. Let's go to weekly and see. Okay, weekly not showing anything in terms of buying it right now. But Coal India might, just might. Oh, on the weekly chart, we have a nice, huge, bullish engulfing pattern, right? Okay, that's pretty strong. Only the volumes are not there. Earlier, from 300 to 400, had gone up on really, really good volumes. Uh, there's a note, by the way, which says that coal stocks at the coal-fired power plants in India are the lowest ever for the last 20-25 years. That's bad. And Coal India is the main importing agency, and for all and then all the coal mines got uh, cancelled, and Coal India virtually now is a monopoly. So might be uh, just sticking my neck out, a good time to buy this. 340. It's at 350 right now. I think it's got some really, really good support at 330, 325. Any up move in the market will take Coal India up. I would put this somewhere right on top of the watch list of stocks to buy if the market, and as the market stabilizes or recovers. Uh, Definitely could be done on the FNO to give you a nice good return, and definitely have an excellent stop loss at around 330, 325, and a break below 320 is when you should sell. Right now stuck between all the moving averages, so might test your patience, but I think an up move is perhaps building up. So I would definitely not sell it, and I would definitely look at buying it. We just might look at this stock a month later and say, "Chah, should have bought it." So I would say, for those of you who are willing to take some a little bit of higher risk, only because the overall market is weak, not because of Coal India, should look at buying some of this if your risk appetite permits. First target 370, and once 370 goes, then 395, 400 is easily on the card. So we're talking about almost a 10% return from current levels. DLF, forget it. There's really nothing to do on DLF. If you're a punter, and if you're a gambler, and if you want to really take your bets, then fine. But technically, it's made a new life low. It's not from any base. There is no evidence of any strength at this point. This is not even a piercing pattern. It's just sort of an on neck line. Might go to 120 and come back. You probably see a lot of volatility in this stock. Uh, I think fundamentally it looked very cheap, but these are the times when you should be very wary of fundamental analysis, because fundamentally it's going to look extremely cheap. On a price to book value, it's going to look extremely attractive. But you look at the big picture, you look at the macro stuff, and there could be a lot more punishment for the stock and the company, directly or indirectly coming from the government through its various agencies because of its was known proximity to the Congress, or rather the Gandhi family. So you never know. Stay away from this unless you're a punter. And for all you know, this may not be a nifty stock in a few weeks whenever the next review happens. Okay. Then Dr. Reddy's. Wow. So how come the pharma index is down? Okay, so the Dr. Reddy's also is going up. Didn't come down on any particularly high volumes. General overall market correction looks like. Watch for this price, buy above 3000, or it might cool off to 2750, at which point it will be probably a good time to buy. GAIL, Gas Authority of India, so 450, it's just pivoting around that, either breakout or breakdown from that. Volume picture saying nothing. MACD totally flat, RSI at the 50 zone. Tough to predict, and of course 470, you've got a nearly clear straight resistance level. So, oh, by the way, hope some of you noticed. So this is like a sort of inverted head and shoulder, right? So we've got a rally. We don't really have a left shoulder, but we have a nice head, and you have an inverted right shoulder happening. And actually, if you look at it, it's inverted head and shoulder inside the inverted head and shoulder. There you have a left shoulder, head, and that's the right shoulder. Clearly neckline was there. Measuring implication, I would say, more or less met. And this is now 4-5 months in the making. Would take many more weeks, and definitely many more weeks, or 2-3 more months to complete. But we are talking about potentially 400 to 470. So for 70 rupees, 470 plus 70, 540 as a possible target on Gas Authority of India, maybe sometime uh, early next year or late this year. And that brings us very close to its life high, 537. How nice, right? So technically you would look at buying it, or definitely put a stop loss buy order at 475, as and when that happens and breaks out with good volumes. Right now it's wait and watch. Right, so which was the other one? I think BHEL, GAIL, which was the other buy? Sorry, didn't take notes this time. Does anyone remember what was the other one? BHEL, GAIL, I had mentioned one more. Pharma stocks, Coal India, thank you. Yeah, all right. Next, just looking at gold B's. Gold's had a pretty good correction, and really no sign of it going up right now, but good support at 2400, sort of a double, triple, quadruple bottom there. But well, that's it, really nothing much. And actually in the last 2 years or 3.5 years, anybody buying gold long term has not made money. You could actually get a very long extended sideways move in gold after this mega rally that you've had from 1000 to 3000. Inevitably you get one correction sideways or downwards after that. So anyway, that's about gold. Grassing may finished. HCL Tech. All right, so making new life highs, continues to do that, and just got punished finally after many quarters of actually good results. It has now disappointed the market. Extremely high volume. Some will look at this as a buying opportunity and a bargain. Some are going to short sell this. It's going to be a very difficult one to read. But 1450 200-day moving average close to that support. I would say just wait and watch. Maybe at around 1400 or even 1300. That's the time to have a look at it again. At this point, it's do nothing with it. Right? Massive window here at 1650. Not going to go up very quickly. So just hold on to it. HDFC. Okay, so that's also on a downtrend. 950 I think is what it's looking at. 1000 on the top side, good resistance. 950 on the downside, good support. And yeah, that's I would say 950. Wait for 950 and then we review. Good support, really good long-term support on HDFC is at 920. I would say not so much at the current price, but at 920. HDFC Bank, wow, making new life highs. Okay, so great. Let's just very interesting. Good volumes or better than average volumes today. Very interesting. Excellent candle, huge candle today. 860 to 885. Wow, that's quite a bit. Obviously, it should clearly be bought. Stock that makes new life highs, does candles like this, not correcting with the overall market. So something definitely there in the banking space where the overall economy is, the overall market is not looking at. I'm now wondering whether the market is sensing, with the low inflation, low crude oil prices, etc., that the RBI could start looking at an interest rate cut. I'm just wondering. I'm just wondering out loud. And it's already reacting to that. Markets tend to be ahead of the ground reality by 3 to 6 months. Remember that. So banks should definitely be bought. Okay, Hero Motors. So Bajaj Auto did well. Hero Motors also seemingly pretty okay. So a big candle today. Wonder what happened. Was it results or something? Yeah, the markets discount the future by 3 to 6 months, Bobby. Markets don't wait for evidence. They move in anticipation, right? Uh, so Hero Motors, something happening, except excellent support at 2,800. Probably should be bought. 3,000, just a matter of time, I think, before it's taken off. So both Bajaj Auto and Hero Motors should be buys on the long-term portfolio. Nice uptrend line you'll get here. Yeah, really nothing more to say on this. Okay. Hindalco. Okay, so metal stocks down with the overall index. So evidence of a downtrend there right from August, September, just accelerating downwards. And today another nice red candle. Volumes have picked up. So absolutely no, should not be buying it. However, look at this level of 130, 127 might be an excellent place to buy Hindalco. It's a multi-year level. Should definitely put us some sort of an alert on your systems and wait for that. So I would just stay away, wait and watch and see how it behaves at 130. If it takes support, should start picking it up. I think right now to short it might be a little too unfavorable risk reward ratio. It's right in the middle of no man's land. 130 good support, 150 good resistance. On the other hand, if it does bounce up to say 150 and doesn't show evidence of going up, or if it bounces up to 150 on low volumes, at that time it will be a good time to short with a stop loss of around 156, and then again a target of 140, and then 135, 130. HUL, wow. So again, wondering what FMCG index weakness was about, because HUL is definitely not showing the sort of weakness that was there on the FMCG index or on the overall market. So looks like the company or whatever the market is really liking it. 700 or thereabouts, potentially good support, right? Or even 720. Okay, so lower prices, FMCG probably should be bought, at least HUL, maybe at 710, 700, and once it breaks 770 or gets used to that 750, 770 range, don't be surprised if it's 1000 rupees sometime early next year. Right. Really reinvented this self and itself, this company, and it's just done amazing things. It's a nifty stock, which is like a almost three bagger. It's not yet 900, I know, but from 2009 onwards, on a nifty stock to get that sort of a return, fantastic. Or even from 2011. Okay, ICICI Bank. Ha. So finally broke out of the 2008 life high and has managed to hold on to that. This 1400 has really become good support. Has tested it again. 1420, 1425. Definitely should be bought, I think. HDFC Bank, ICICI Bank, or the Bank Nifty itself. You could think about going long on that. The more banks I see, the more bullishness, I think, or okay, bullishness may not be the word. Excellent support at lower levels is what I'm seeing. Uh, Anybody knows when is the next RBI meet? We definitely need to have a trading day that day, right? So if anybody knows, just December first week, okay, fine. Just I'm sure we'll remember, but let's have a trading day that day. Good, Ranjan could surprise. Okay, Rajan, sorry. Okay, so buy. Really good support at 1420, excellent support at 1350. Just a question of breaking out 1600, and 2000 is on the cards early next year, in my opinion. IDFC. Well, the stock's going nowhere, and is quite clearly stuck at 140, stuck between all the moving averages. So technically, there's no level to talk about. You may look at 155 call to write, but like I've said, you should have an SIP on IDFC and just keep buying, buying, buying because of the IDFC bank demerger that will happen about, I think, 15 to 18 months down the road. I don't know if there's been any new news on that. I need to find my old newspapers for the last 6 weeks and review them. All right, so IDFC, just something you should ignore, right? Sorry, ignore technically, and just have an SIP on it. IndusInd Bank. All right, so another bank that is making life highs. What do you say? Just buy banks. This is screaming. How you buy them in the spot market, in the futures, margin, that's really up to you. Okay, so excellent support at 600, 750, 700 next target, 750 next target, and sometime first quarter next year, $1,000 on this is quite possible. No, not maybe next, maybe in the first half of next year, I would say. Okay, so Infi, does anyone know why this big up move happened? Was it because of results on 1010? All right, so Infi delivering now again. I don't know whether we've got role reversal. TCS, HCL not delivering, but Infi delivering and actually creating a new life high. So we should just, it looks like it's another stock to be bought again. 3650 excellent support. 4000 will come and go when I think it just reached for 5000 rupees. Infosys. Here's something to investigate on Infosys, which is with the new CEO Sitka, I think, and the changes that he's putting in and all. Uh, if Infosys is actually now reinventing itself in a positive manner and preparing itself for the next say 10-15 years, it could still be a great buy even at this point. Oh, they announced a 1:1 bonus, is it, Umesh? Wow, that's fantastic, right? So you're going to see a price correction. I don't know when the X date is. No wonder people have bought into it. So yet another bonus by Infosys. I was not aware of that. Thank you for that information. And yep, so this stock will be 2,000 rupees sometime X date, and it become again attractively priced. So fantastic. Just buy it. So 5,000 rupees on current before bonus, 2,500 after bonus. That's another 20% up move. Could easily happen in the next 6 months to a year. ITC, right? Okay. So this is the one which has dragged FMCG index down. So try to recover today, but big upper shadow. But then yesterday, nice bullish engulfing, 200-day moving average, how well it comes into play. Some drama going on. Wonder what, if I don't know if there's any news or anything like that. But again, also close to some 2-year support of 340. Not a very good support, but nevertheless, I would say wait and watch and then take a call on ITC. Stay away from that for now. Jindal Steel. Alright, so I think Jindal's bad news is just going to continue. So I think it collapsed when this was taken away. The coal block, it's at 147, and honestly, there's really no good support for a long way. Yeah, there's really no support all the way till I would say 105, 110, or even 100. It's at 147. Any rise, it will probably get shorted again. Of course, the best time to have shorted was 300 when it did this attempt, and then after that it just collapsed, and then 250 was another opportunity to short, and then it broke 200, and after that, and it's done that on increasing volumes. That's definitely not good. So this is going to take a long time to recover, and any bounce on Jindal Steel should be looked upon as a shorting opportunity all the way to 100. We're at 147, so that's still a lot of money that could potentially be made, right? Immediate short-term resistance and stop loss above that, I would say, is at around 155, 157. You could look at that, and those who are a little more aggressive, 167, 160, 170, good resistance, spot market, and I would say the target is 101. May not happen this month, but next 1 or 2 months, definitely possible, right? JP Associates, alright, so seeming to have found a base at 25, but this 30-31 is a big resistance, fell on high volumes, but not going up on high volumes. Wait and watch. MACD has done a nice crossover, but yeah, I think you can take the risk on JP Associates. If it can cross 31, 31.50, then from there to 35 will be a pretty swift and quick journey. And if you're looking at buying it now, which might be a pretty risky affair given the overall weakness in the market, I would put a stop loss somewhere below that, which is at around 27.50. Alright. Yeah. Next, Kotak Bank. Okay, so this became a 4-digit thing. It's at $1,000 again, 1,000 rupees and 5 paisa. It's been pretty aggressive, I think, in the institutional banking space. So I would say wait and watch, and as soon as MACD does a positive crossover, just buy it again. But again, 1,000 rupees, good place to buy. Unlikely that it's going to go below 955 in my opinion, and it may spend a lot more time here. The market getting used to it being a 4-figure stock at 1,000 rupees. But I think in the multi-quarter time frame, look, the stock has gone from 600 to 1100 in a year, and we're talking about a nifty stock that's almost 100%. Uh, this could be 1250, 1500 next year, right? Okay, looks like banks are what we need to look at. So I need to modify my statement about don't buy anything. Looks like banks are what you should buy. Okay, L&T. Well, good support at 1400. Volume seem to be itching up. MACD seems to have positive divergence, and L&T, for this 200-day moving average tends to be pretty strong, but you've got 1500 on the top side, which is going to be a very good resistance. So you could go long on this and put a stop loss at around 1360 on this, and once 1500 1530 breaks, then 1600 1625 is going to happen pretty quickly, and then even 1750. And yeah, that's all I would say on that for now. Looking at the weekly chart. Okay, really nothing much. I'm just looking to see if there's some support. Not really. Still a little tentative. Might be a little better to wait in terms of risk reward before it crosses 1525. But till then, if you're a long-term investor, yes, buy. Otherwise, wait for 1525 to buy it as a trader. And if it comes to around 1400, look at it carefully and you could buy it again. I wouldn't short this. Lupin, oh, huh. So another life high on Lupin, and again went from $1,000 to 1400 rupees, matter of 4 months. Again, that was on volumes erratically here and there. Right now, premature to buy it, but keep a watch. MACD is showing weakness. Today's thing, okay, good candle, but nothing on the volumes. Where to wait and watch? 1300, maybe 1250, 1300. If it breaks 1425 on good volume, that's definitely a good buy. But till then, should wait and watch. Okay. All right. M&M. All right. So this is why the auto index has gone down. M&M again gone down, but not on good volumes at all. So must have been some news, I'm suspecting. Maybe not good results, or auto sales or tractor sales down or something like that. Watch 1200 carefully. 200-day moving average just below that might take support there before it turns back up. 1425 definitely really good resistance. Reduced tractor production. Well, that's okay, but why is that reduced tractor production? If there's something on that, that would be great to know, because this is the quarter in which you typically reduce that, because monsoons are done, and that's post-monsoon is when, if the monsoons are good, you get good all this buying of that, and then after that, it's just a cyclical thing. So, and the production will go up again next quarter, pre-monsoon. But if that is reduced tractor production because overall agricultural productivity or use has been less, then that's not a good picture. But anyhow, technically it's not a buy. Perhaps 1200 is on the cards, and when we relook at that at that time, then we will see what to do. Maruti, alright, so it's made a fresh life high but gone sideways, so 3100. There was some news that they're going to introduce 10 new cars in the next 3-4 years. 2 cars every year or something like that. So the Ciaz, I don't know how response to that has been. Some people are saying it's priced a little bit on the high side. Apparently there is no premium at all in the black market for the allotment letter, and people are actually expecting discounts once Diwali is over. So again, it's one more attempt by Maruti at the premium segment, which it has never really been able to crack. But going to introduce quite a few in the next 4 or 5 years and take its market share back up to 50% apparently. It's 46% right now. So a lot more definitely going for Maruti in the days ahead. No hurry to buy it, but again, just want to point out something. The stock was 2,000 rupees for 3-4 months back, and it's 3,000 bucks now. 50% on a Nifty stock. I mean, but here's the other thing: the Nifty itself from 6,000 levels went to 8,000 levels. Which itself is not, of course, 50%, but 30-40% on the Nifty. Individual stocks would have definitely, outperformed that, and Maruti is definitely one of them, and so are the pharma stocks. Okay. That's not part of it anymore. NMDC. Is NMDC part of Nifty? I have to update my lists. Okay, thank you, Sid. Okay, watch carefully. At 150, it's 159. 150 is multi-year support, just like BHEL had 200 rupees at multi-year support. It's done a reversal for now, but it's exactly at the 200-day moving average around 160. If it does come down to 150, it's a buy, perhaps a buy again at these prices. Not a stock that tends to do very well and tends to become very erratic in between, so a little tough to deal with that. But all said and done, technically, yeah, could buy it at around 155, put a stop loss below 148. But strictly speaking, let it break out above 170. You have this resistance line here, that's at 169.50, 170. You have all these moving averages here, and then from 170 it could quickly go to 185. NTPC, what does this? Try to get rid of this on this, it doesn't go. Okay. Sorry. So NTPC stuck between some really important levels. As you can see, all the long-term, short-term moving averages bunched up here. 145, excellent resistance. 138, 134, excellent support. Never been a fan of this stock. Tends to be very lazy at times and occasionally do this big bout of massive moves. But here's the thing: right now, it's taking support on a multi-year downtrend line, right? And so I don't know how to remove this chart expert is cluttering this. One sec, let me give it a shot. No. Okay, I leave it. Okay, so I hope you can see this here. Let me make it weekly. Yeah. Right. So 4-year downtrend, which has definitely been reversed, and a big correction after that, and then now it's taking support at that downtrend. So not as a trader, but as an investor, if you're willing to hold this for 6 months to a year, then it's definitely a good technical buy. Only thing is your stop loss is probably below 130, that's 10 rupees from now, and you will have to be very patient for it to break 145, 150, and then go to 165. So you're talking about not too much of a gain in terms of percentage, so not that attractive, but well, one thought that comes to my mind is, with this coal production going down and the government obviously not wanting to find itself in a mess again now that they have such a nice clean slate on coal mines, and NTPC being a PSU, it might become the favored allottee to which extra coal etc. is given over and above private sector players. I'm just putting out an idea here, and this is a multi-month, multi-year sort of thing, and this stock could actually start doing well on the power side. perhaps much better than the private sector ones. So that's something to keep watch out for, and if evidence piles up on that, then this stock, going back from current prices to 250 is almost a 80% return, and even let that take 2 years to do that. That really will be good, right? ONGC, all right. So lifetime high, double top, cooled off, right? ONGC again being a crude oil producer. Uh, Global crude oil is coming down. That's something that is not in its favor. However, the subsidy burden is off ONGC now that there is no under recovery and all. And there is this gap here. So 360 should put an alert at 365, 370 on ONGC, and if that comes, that'll definitely be a buy. Technically not a buy. Dojis and 400 and downtrend there. 375 good support. Put a uh, alert there, and if it holds, then that will be a good time to buy it. PNB, Punjab National Bank. Okay, definitely an underperformer in the banks, but all the public sector banks are actually not doing too well vis-a-vis the private sector banks. And wow, look at this, window closed. Okay, window closed with that candle here. This move, talk about technical analysis and windows and theory and all. So that's a window you don't have to worry about anymore, and could be a buy. Good, excellent support at 850, 845. Just a question of it breaking 1000 again. I think that's still 80 bucks up from here. But once that 1000 rupee goes, then I think it'll just gradually go back to its life high, and of course you'll have the resistance at 1200, 1300. So we're talking about a potential 30% upside from here, and even if that happens a year from now, that's really be good. So between all the other banks we saw, private sector side, which are mostly at life highs or at life high, or a little bit below that, versus PNB, you've got a clear 30% up move that is quite distinctly possible within, I think, the next 6 months to a year. So might want to put this on your priority list of buying. Power grid, more or less forget about this. Goes sideways for too long. Let it break out or break down, and then we will review this. Right back, see, it's not part of Nifty anymore, correct? Reliance, okay. I would say wait and watch on Reliance. This uptrend from 2012 has been broken. Downtrend here in place, but 900 is a good support, and right now it's sort of in the middle of no man's land. Just wait and watch. I would say put an alert at 910, 905, and if it comes there, look at the chart carefully. If 900 is a support, then buy it. Otherwise, it's only, again, if it goes above 970, 990. Till then, just hold on to it. I mean, just stay away from Reliance. Might want to, I think, write the 1000 call and maybe the 900 put. Yeah, 2 weeks away. Might still be a worthy strangle. Reliance Infra. So it's come to 550. Wait and watch. Actually, it could short. Yep. Or hold on. Wait. MACD doing a potential crossover. I would say too risky now to do anything. A buy or a sell. Just wait, and anything above 610, it becomes a buy. Those of us who are a little aggressive could even buy now. It's left the lower Bollinger Band, which itself is a sign of strength, and you could put a stop loss below 535 or even 520. 600 will most definitely be a resistance, 595, 600, and if it breaks above that, then 660. Put this as a stock to be bought if the market stabilizes or recovers. it could give you a pretty healthy return. And no need to jump into it right now, unlike some of the others, but definitely should be a buy when the market stabilizes. State Bank of India, well, showing strength like all the other banks. Life high at 3,500. We're talking about almost 1,000 rupees from here. 30% just like PNB. Upside possible, right? Good support at 2350. 25 psychological mark. Volume's not so good. No wonder why. Is it results pending or something? All of these, by the way, you should have the results calendar. Yes, and if all that definitely could be bought with 2350, 2340 as a stop loss. 2650 is the first resistance, and after that, after 28 3000, that's the next stop. SSLT, wow, what a big recovery and the shadow this was. Big fall. Don't even touch it with the barge pole right now. Let it settle at 215, 220 at least, and then we will review it. Any bounce actually should be shorted. And definitely no question of buying this at this point. Sun Pharma, alright. So going from strength to strength. There's also this report that the CCI, which is the Competition Commission of India, was telling Sun and Ranbaxy that it needs to sell off certain units in order not to be a monopolistic company, which they have apparently agreed to do or something like that. But the deal and the merger is to be done by the end of December, most likely to go through. At this point, at least technically, there's really nothing much to do except wait and watch. If it comes to 770, 780, think about buying it. Otherwise, clear resistance at 870, and then they should be bought only after that. In these M&As, anything can happen suddenly last minute, so that's an event risk that you have on Sun Pharma, so be careful of that. So on the other side, your Lupin, Dr. Reddy's, and Cipla could be safer buys, given that there's no event risk. Tata Motors, okay, made a fresh life high but not able to sustain it. Just a lot of charts seem to have this, this up move somewhere mid-September, and then immediately the next day a big cool off that happened. I wasn't here. I don't know what news or event happened, but across the sectors, there seemed to be something that happened mid-September. If anyone can fill me in, great. Here's a gap, and the stock needs to go to 450 Tata Motors before we can consider buying it. So stay away from it, watch for 450 at 25 rupees down, and then we shall review that, right? But otherwise it's making new life highs. Tata Power, so there again we have this long-term downtrend. Let me just extend that, and it's come exactly there sometime last week, and taken support of that at 80 rupees. Wow, I would definitely say buy Tata Power, right? It's not going to give you mega buck returns, but Tata Power is definitely worth buying, and I'm saying that because MACD uh, 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 is just showing strength. It's a very gradual build-up of strength, just going up here. It's not yet gone to the positive thing, so strictly speaking, you shouldn't buy. But I think we're missing out an opportunity here. Put a stop loss below 78 and just hang on to it. It'll not jump up quickly. 90 rupees is going to be a big resistance, 90, 92, and once it goes beyond that, then 100 could quickly come on the cards. I would even stick my neck out and say, those of you who are doing futures, think about buying long futures on that, or do it with options, with or without capital protection. Tata Steel. Okay, Tata Steel below that long-term downtrend line, below the 200-day moving average. So Stay away from it for now. Move up to 465, 470 could be a good one to short uh, with a stop loss at around 480, and this might actually fall down to 420. We have a very significant uh, level here, which is a huge multi-year neckline, and that's more or less where it is. Question is whether that is, if it breaks down this, then you could get a much bigger fall. On the other hand, it could just take support there. So rather than take any unnecessary risks, I would say just wait and watch. Wow, MACD has done a crossover again, so could be a buy. So, and yeah, one more thing on Tata Steel, as and when the European steel mills get sold and the losses go off balance sheet, and then we get this big cash flow into the company, uh, that's going to be a big plus in terms of financially. So you could get a re-rating of Tata Steel that happens once the European units are sold. So be aware of that. I have no idea what the timelines are. Somebody investigate it if they can and share that information if you find it. But as soon as that gets announced, or as the market feels uh, uh, that it's going to happen, you're going to see a up move on the stock. Balki says FA target is given at 600. Okay, 600 by when and on what basis is this target, Balki? Any idea? 1 year from now? All right. Okay. And any particular reason for this target basis of calculation? So we're talking about 25%, 20-25% upside from here. All right, fine. Which is pretty good for a steel company, that's for sure. And I dare say that that target could actually be higher once the steel mills are the European mills are sold, right? Okay, so wait and watch, I would say, and as soon as it is above this zone at around 470, you should definitely consider buying it. Or it comes to around 430, 435 on low volumes, and you feel that this support is going to hold, that will be another excellent place to buy it, right? Resistance wise, very significant resistances all the way to 500. Once 500 breaks, then the big upside will start, right? At that time you might actually want to consider long futures, 500 to 600, 20%, and that's 100% return on margin on futures. TCS next. All right, so big, huge, wow, very unusual gap down. Must be on high volumes. Yes, absolutely. Uh, Base support 2350, right? So the thing about TCS, if I read it right, was that they missed the dollar guidance and not so much the rupee guidance, which basically means that they, even if the rupee depreciates, they might make money in rupees, but the business itself has not done well, which is a concern. But keep one price in mind: it's at 2441 right now. Keep 2260, 2300 in as an alert, because that's not a great or very important one, but a significant enough life high that could provide some really good support, at which price it could be an attractive buy. And most definitely, if it comes to 2000 for some reason, that's almost 20% down from current prices, then that'll be a fantastic buy, I think. Okay, Tata Tech Mahindra. Okay, so why did this slip today? I guess because of the knock-on effect of how Tech Mahindra will perform. So all news result based reactions. So stay away till the news is out on Tech Mahindra, and then we'll take a call. Right. Ultratech we finished. Wipro. Right. So I think Wipro. I don't know if Wipro results have been out, but there is your double top on Wipro at 600. May go down to 550, but definitely a stock that I think will bounce back. I don't know if the results are out. If the results are not out, then just wait and watch. If they are out, then look at 540, 545, at which time it could but potentially be a buy. Okay, so have I missed out any of the Nifty stocks? Anyone? Uh, Z, is it? Okay. Anything else? All right, so Z .com life high in 2000 at 824. Way far from that, obviously, right now. But if you ignore that uh, as a very, very crazy aberration, then it is practically speaking making new life highs, right? So Z is definitely going strength to strength. Uh, and should probably be bought. Today went up with good volumes. Wonder whether it was anything to do with results. But yeah, Z is definitely a buy. And as a trader, stop loss below 310. As investor, I would say stop loss below 295. And 350, 400, I would say the next target. Just have to hold on to this. This is a weekly chart, and you can see that in 2012 it just took off. In 2012 it was about 925 rupees. It's in 2 years it's almost tripled, 2.5 times, right? Yeah, would say buy it and just hang on. Okay, Clariant is nifty.
Yeah, I don't know if it's nifty.
I don't think Clariant is nifty. Can somebody check? Strides.
No.
Okay. Balki is asking, with banks expected to do well, do you still expect Nifty to correct to 7,500? Uh, banks have approximately, if I remember right, between 25 to 35% weightage on the Nifty, right? And uh, so we are at, let me go back to this. So we are at 7,700, and 7,500 is what? Just 250 points here. We're just talking about 2-3%. And if you're talking about 7,000, we're talking about 10% from here. The question is, what are the other things? So IT is a big heavyweight, which is obviously not doing well, right? And if the TCS and HCL Tech and Tech Mahindra drag it down, that's a distinct possibility. Metals, remember, are still weak. Some are at support, and your infrastructure is sort of so and so iffy. The reason why the Nifty would go up is because of the banks and pharmaceuticals, basically, right? And to some extent auto. So what one could do is actually do a weighted study of these sectors on the Nifty and see how it is. And my guess is that it would probably be 50-50 this side, that side. Of the stocks, the sectors taking the Nifty up, and 50% the sectors taking the Nifty down, give or take 5-10% this side, that side. So really nothing meaningful. So the risk actually, I think, is an event, and it could be a global event more likely than anything local, in my opinion, unless something like a shock defeat or a very low seat turnout for BJP on Sunday's verdict of Maharashtra and Haryana, which is not expected. And the other thing to remember is that October, well, sort of getting over, and December is the cool off when the global markets tend to sort of go into holiday mode. So I don't know. At this point, it might look a little unlikely that the Nifty could go down, but there's one thing that I have learned: never say never. I would just say that maybe there's less of a possibility with banks being strong that Nifty will go down, but overall the Nifty is most definitely weak, and the global indices are weak. The global risk factors are most definitely there. It's a question of sentiment. 10-20% changing of price because of sentiment is definitely easily done. There's no doubt about that. I think we've I don't know if you've touched upon that, but especially in the mentorship group, all those charts that you guys created or recaptured of price to book value, of price to PE ratios of the various stocks we were looking at. I mean, how do you explain such a big variation of almost 2x, 3x? You can't explain that fundamentally, right? I mean, it's all sentiment based, and if the global sentiment were to take a knock, which it potentially can, then sure, 7,000. And here's one more thing I would say, that the triple or quadruple life high of the Nifty at 6,300, 6,400 has not been tested. And I've been saying this again and again and again. Any very important level like that needs to be tested. It has not been tested as a support. So I am of the firm conviction that 6,300, 6,400 will come. I can't tell you when it will come, how it will come, under what circumstances it will come, but 6,400 will come. That's another 600 points below the 7,000 that we are talking about. What will make it happen? I don't know, but something will make it happen. At this point, 6,300 doesn't look likely at all, but I wouldn't say that, I wouldn't rule out 7,000 though. 7,500, 7,000 could be on the cards. So I hope that answers your question, Valki. Okay, any other question? All right, so I'm sure there are some stocks that all of us are holding or have some concerns about. So let's go through that. It's 9:45. We still have some time. So if there are any stocks, put it up, and let's review as many as possible. So Bobby had mentioned Clariant. I don't have it. How come? What's the proper name? Is there some other name?
No, it's Clariant.
Okay, Strides is there. Strides Arcolab. Looks like it had a
Clariant is B6390. With Control F, you'll find it.
yeah. Okay, so the stock has not been corrected for its corporate action sometime here. I think Star Acro Labs on an adjusted basis is probably doing a life high. I'm quite sure about that. But okay, something happened here from 800. It's dropped
Yeah,
to
dividend.
dividend, is it?
Yeah.
Right, so it's gone some massive dividend it has given. So in which case, obviously, I mean, it's not like a bad stock. Uh, so from a technical perspective, seems to have taken support here at around 620. I would perhaps watch for it for some more time and could perhaps be a buy. It is a life high stock, plus it's pharmaceutical. Just either riding the wave or on its own doing well. And well, look at this massive dividend. I mean, why are they? I mean, very unusual for companies to give out such massive dividends. So was it an event? Was it some anniversary? Was it some milestone that they achieved? Because obviously not going to happen again, right? Okay. Next is Ashok Leland. Wow, I'm shocked. I was not expecting this stock to make a new life high. I'm seeing this after a long time. It was struggling at that 25 rupee thing, 30 rupee thing. Oh, actually, sorry, forgot. I think we analyzed this before, and it might make a new life high, correct? I've got my memory uh, bundled up. Okay, anyhow. Definitely showing strength. Nothing on the volume side. Indicators looking healthy. 40 rupees, excellent support. I would say in that zone of around 38 to 41. and probably will hit 50 in my opinion. There was some news that they are going to introduce electric buses, and apparently they are the only manufacturers of double-decker buses in India now. So they have this company in UK which manufactures and sells electric buses, but with some subsidy from the UK government to UK public transport, and they're going to bring that into India. And the hybrid versions, they're going to have engines from Ashok Leyland itself. I'm not sure that's going to be a big money spinner, but yeah, you never know. But okay, anyhow, technically, I would say it's a buy. Good support at 38.20, and once it settles above 45 again, then I think it will climb to 50. Might even be something worthwhile taking up on the FNO side. Okay, what next? Uh, Motherson Sumi. Ah, so suddenly went, was this result or something, early September or like 8th, 9th September, big jump up to 450. So here's the thing, it consolidated. This is what it was doing before I went for Hajj. Obviously it broke out. Let's see if it did that with volumes. Oh yes, absolutely. Broke out with volumes, went up on even better volumes. Seems to be some sort of churning of the portfolio that's going on in a change of hands. I don't know if the stock is fundamentally expensive right now, but technically it's, I think it's got some downside left. Uh, MACD still going down, though RSI and stochastic have recovered. 350, let's see one sec, probably a good support. Yeah, somewhere there is definitely support, right? And could hold on to that. But if it slips below that, then I think it'll come down to about 325 and not lower than 310 in my opinion. At which point it should probably find a good base and then perhaps turn back up. So the thing also is the uptrend line has been broken, no doubt about this, right? And I think it's churning of stocks that's going on. People are booking profits and that sort of stuff. Limited downside. Uh, if one is holding the stock, then maybe one should put a stop loss below around 338, 340, and at least partially book profits, and then rebuy this at around 300 if it goes there. Right? Fresh buying at this point, I would just say wait for maybe a few more days, a week or something, and please find out if the results of this has been announced or not. Right? If the results have not been announced, then that's something that you want to factor in before making a decision. All right. So that's Motherson. Anything else? We were looking at Arvind before we left. How is that done? Okay. So it's cooled off on low volumes, most definitely, right, Arvind, and of course the uptrend will also be broken. May come down till about 256, 250. It's at 275, at which point it might be a good buy. And it's really made a new life high. Right, so that's the weekly chart. This was the high from 1994, and it's done that. And actually, if it were to come back to say 250 or even 210, that will be an excellent technical level to buy it at, Arvind, right? So I would definitely look at keeping this on the buy. Sorry, we are keeping this on the buy list with an alert there. All right, any other stock? Nope. All right. So winding up for the day. I think short discussion. Basically, banks are what you really need to buy. Doesn't seem to matter which bank, but definitely buy banks. There are these stocks at lower levels that you can look at: BHEL, GAIL, Pharma. Pharma stocks, Coal India. Uh, that's sad, Arvind here, right? And what is it? Right, and I'm sure there are many other stocks which are there. Uh, that can be bought. So actually surprising. So started off by saying that perhaps you shouldn't be buying anything. Now saying that there's definitely one sector that you should go and perhaps buy quite a bit of, which is banks and to some extent pharma. All the others are sort of there. Uh, and as far as the overall market is concerned, a global event that might just knock off the market is possible, but you can't live in fear. You just have to take your decision and get in if things are okay. Okay, so any questions, any last minute comments, anything? Do we wind up? Alright, so just one small announcement. I'll let the mentorship group know by tomorrow evening whether we are meeting on Sunday morning at 9:30. Meet for maybe 2-3 hours, catch up on what's been done, and then look at how we want to move forward on the mentorship program. Right. All right. So I think that's it. There are no questions. All right. So thank you. Good night. I'll upload the recording once it becomes available, and we'll send out the links by tomorrow morning, hopefully, or tomorrow afternoon latest. Right. Thank you. Good night. Have a good weekend.